Hello, welcome to another session of our podcast series with Math Unleashed. And here we have a visionary leader again. So, today, when we talk about startups, funding, and their growth, it becomes the most exciting thing for every entrepreneur or every newbie in the market that how are we going to get funded? Who are the investors who are going to put money? And so, we thought let's hear from a legend or a visionary leader who has done this himself as an entrepreneur and who has turned from an entrepreneur to a legendary investor and who has set up a fund which we all look up to, not just because the amount of money or the number of startups they have invested, but because of the philosophy behind that. The founder we are talking about, he believes in entrepreneurs invest in entrepreneurs. That is the mantra which has motivated him to open this fund. This is also one of the fund which is very special to us because this is based out of Hyderabad. It not only invests in US, it also has an India focused fund. So that is what makes it more exciting for entrepreneurs and ecosystem enablers like us. So today we have Mr. Dayakar Puskoor with us, who is the founder and managing partner of Dallas Venture Capital, and his fund is focused on investing in AI/ML and cloud technologies and enterprise technologies. His fund is also focused on investing in startups across Seattle, US, Israel, and India. So today we are all excited and we would like to welcome Mr. Dayakar Puskoor for this wonderful session. Thank you, sir, for giving us time and welcome to Math.
Thank you, Rahul. Thank you. Thanks for inviting me. First, I would like to say huge thanks to T-Hub and also Math, especially Rahul, inviting me here. It is exciting to see how this T-Hub has evolved, and especially what I heard today from you about your vision and how you are implementing and also helping the startups, especially in the AI. So that's as you know, it's a very dear and near to us, all of us right now. It's not just near and dear, but it is the future we all are looking at. So I'm love to talk to you today what we are doing and how we can work with Math.
Thank you. And I am sure that all of our listeners are all excited today to understand and hear from you your journey and also get some great tips in their journey. So before we get into the investment, funding, and what Dallas Venture is doing and how AI entrepreneurs can get benefited, if we come back to Mr. Dayakar Puskoor first. So this man started his journey from Hyderabad, from the Telugu speaking state called joint Andhra, probably that point of time, and he became a technologist, he became a tech entrepreneur. So if you can tell us like how a technologist became a tech entrepreneur, and then from tech entrepreneur, how or what motivated him to become a venture capitalist?
Good. Thank you, Rahul. Just as you said, like I'm so proud to be from here, from or whatever we called before, joined Andhra Pradesh, now Telangana. Born and raised in Warangal district.
Right.
It's as you know, like 2.5 hours from here.
Right.
From a very traditional agriculture family. So I'm happy to tell you, like after my studies, I never thought I'm going to go to the US. I was more of really, do something here and all that. But luckily, I was able to, go to US and, finish my master's in computer science. After that, joined Motorola, and I was there for 10 years at Motorola. Then after that, I started a company called JP Mobile. That was 10 years. That's where my entrepreneurship started. Raised, almost $55 million and planned to go public with this company. Then 9/11 happened, we didn't go public. There are a lot of lessons learned. I'll talk about those. Then after that, really, I started a venture fund. It used to be called Naya Ventures.
Right.
We'll talk about our fund, one vintage, which is 2012, then 2018 vintage, and then 21 vintage.
Right.
Then 21 vintage, we changed the name from Naya Ventures to Dallas Venture Capital. So I'll give you some of those, my own learnings and what we have done with those learnings, how we changed. I always tell, we always make a lot of mistakes, but what you should learn is like not to repeat same mistakes. Right. So I think we'll talk about my entrepreneur to a venture capitalist, and as you mentioned, I always believe really entrepreneurs, investing entrepreneurs, as you mentioned, that's mantra. With that, really, if I look at what I learned as an entrepreneur, let's talk about that one if you want to.
Yeah. But we will be also excited to understand you being an entrepreneur. Normally, I have also been an entrepreneur for like close to a decade. And as we say that entrepreneurs, once you become an entrepreneur, it's like a drug. You can never stop building something, right?
Yes.
You always
Yes.
crave for building something
Yes,
new.
yes.
But what was that differently motivated you that you ended up building a venture capital firm?
Very, very good question. Very good question. It's interesting. After I was done, like then when I want to start, venture fund, my brother-in-law and some of my friends said, like, you learned so many lessons. Why do you want to do other one right now, right? I said, like, really, I felt it's almost like a kind of calling. What I went through as an entrepreneur, especially when I raised $55 million,
Right.
were good, VCs, but I felt like they were helping me doing some introductions and advice was good. But what I felt really, especially when you want to sell into enterprise software, you need to have somebody helping you, not only doing introductions, but how you can help close deals. So that's one of the gap is. So I would love to see like how I can help because build a lot of relationships with people who work with me, work for me. So I thought like that's where a biggest advantage I can provide to these founders. And also I said like that's one of the biggest differentiation as a fund we could really start with. Our mantra will be, not just investing money, in you, but also how we can help you get that revenue. So
Right.
I can tell you, I don't regret a single day. I know my wife says maybe if you start a company as you did, maybe I would have become more wealthier. Be honest with you, as entrepreneurs, you have full control. What do you do?
Right.
And you don't have to, of course, you have invested, but you're the one in the driver's seat.
Right.
So that's a big shift for me, be honest with you. There was a lot of learning also. Going from an entrepreneur where you have full control to you don't have any control. But the same way, how do you become that coach or mentor and also being part of the team with these entrepreneurs? I think that's what I learned a lot. I feel this one job as a venture capitalist, we get paid to learn every day. I feel like from entrepreneurs like you, so many things we learn, not only technology and so business model, pricing and all that. So I don't regret a single day. Maybe my wife may complain about really amount of time I spend versus right now. Before I worry about only my company, right now I always worry about almost 25 to 30 companies every day.
That's
a big
perfect,
shift.
fantastic journey. But and that's where I would like to add that in math also, when we are also helping startups, our major focus or my major focus is, which I encourage all the entrepreneurs, is that rather than chasing the investors, let's chase the customers, because that's the area where we can make the difference.
Yes.
Investors will come and that. But end of the day, even the investors would like you to get customers. So I'm glad you also mentioned the same line that how as an investor you are also helping them to make the revenue. So I echo the thought. Coming back to, since we are in math and we are in the world of AI now, and you are with us. So what is your AI mantra, or I will say, what is your investing mantra to invest in AI first companies, and how are you looking at them?
Sure. So it's interesting. AI is not new, as you know. Like you went through REC when you're studying also. When I studied too, AI was there in the books. The only thing is none of us could implement it. We didn't have computing power. We didn't have enough GPUs to implement. Right. So now the good news for the current startups, they have a lot of computing power available, and now a lot of tools are getting built for them to actually optimize these AI applications and all, right? So I really kind of see AI is not new for us. Just to kind of give you, when we started our fund one, I kind of call it 2012 vintage. I told you like there was a small fund. Within that also we did 2 investments. And at that time we were writing very small checks, $250,000 to $500,000 checks. We invested in 2 companies. One was actually started in IIT Chennai. A company called Hyperwatch is still is there and doing very well. This is in the KYC business. They are the leader right now providing, for companies like Jio and other banks, how do you do the KYC when you're onboarding a customer? Then other company was based in Cupertino, a company called Altia Systems, that was in the AI camera. So that also been very successful as. Then 2018 vintage fund, we invested 2 more AI companies. One actually across the street from you here, a company called Core.ai.
Yes.
You heard about it. Then another company called Amplify.
Right.
They both are doing well, and I'm happy to see Core used to be 100 employees when we invested. Now they are close to 1,000 employees in Hyderabad.
Right.
So I feel very good about it. Being from Hyderabad, how this company has grown. Same thing, Amplify actually based in Dallas. They also have their whole development team in Hyderabad. So this is one mantra you will see, as a fund, as you mentioned, happy to tell you, even though we are based in the US beginning, but then as you know, we have created a fund also here. Now our US companies and India companies together, there are close to 3,500 employees working in India for our portfolio companies.
Wonderful.
Hyderabad and Bangalore and Chennai, Gurgaon and other places. So I'm happy to see how it has grown. So coming back to your question on the AI, I think as I mentioned, $900,000 in 2012 fund. Then 2018 vintage, we did $6 million investment. Now the latest, our Dallas Venture Capital Fund, India fund and US fund together, we invested close to $24 million.
Wonderful.
Close to 14 companies right now.
But what is that exactly you're looking at when you're investing in an AI company?
Sure. The number one thing, Rahul, as you know, it's almost become if you don't have AI, it's like people don't even look at you. So,
right.
So I tell people.
I think now it is no more a differentiator.
Exactly. That's what I like. You do have AI.
Yeah,
okay?
you need to.
AI. You do put that one. But then tell me exactly what AI you are using it and how are you solving, as you just mentioned before, problem for your customer, right?
Right.
The customer will buy a product if you are giving, I kind of call this one, a painkiller versus a vitamin, right? Or are you giving a painkiller? If you are giving painkiller, they will buy the product from you, right? So the AI also same thing, the same what we went through enterprise software. If you look at enterprise software, kind of divide into 2 different really, categories, right? You look at information technology layer, then really you have what is operational technology, right? In the information technology layer, we call that infrastructure software. That includes your cloud ops, DevOps, SecOps, or really anything related with your cyber security, right? That software, what I kind of call horizontal software. Who are the buyers for that one? Information technology buyers. Could be VP of engineering or your CTO, CIOs.
Right.
They are buying that software they need, like even T-Hub for you to run this infrastructure, you need that software.
Right.
So that's where we kind of say, what do you want to play with? Same thing applies in the AI too. Because to build AI, as you know, vertical application, you do need really this infrastructure. Infrastructure could be observability, AI ethics, or really, inference engine, or any type of optimization you had to do and all that, right? So that needs to be built by somebody. So one good news is can tell you we already started investing in that.
Right.
One of the companies we invested in Bangalore called Simply Smart. Okay. And we also invested a few companies in the US, a company called Fiddler in the AI observability.
Yeah.
There's another company called Holistic, which is in the AI ethics. So we kind of call these are guardrails or tools you need. So that's one layer. Then the AI application layer, they could use all these tools. So we have done some investments in that area also. A company called Docket, it's in the AI bookkeeping. Then we also have done a company here called Dice. That's also in that area. Then as you know, one company we invested from T-Hub, it's called Blue Copa.
Blue Copa.
They also they are helping CFO office how to really make sure you get a dashboard for a CFO without going through a lot of troubles or really without wasting a lot of time. They're able to optimize a dashboard for CFO.
Right.
So that's where we kind of see AI. You have the horizontal layer, also vertical application layer. So as a founder, you need to decide where you think your skills are.
Right.
You have some vertical skill, let's say in healthcare. You should focus on, there's so much going on. As you know, you come from a healthcare background.
Right.
It could be devices, it could be,
pharma.
Anything in the pharma, drug discovery. There's so much needed in the
Clinical
drug
trials
discovery.
in those areas.
Exactly. So I think that's what the entrepreneur should look at. What my expertise are. Where did you find a gap? The business gap. Don't worry about the technology first. Find the business gap, then apply AI to it.
That's a wonderful. It's just a validation of the fundamentals.
Yes.
Right. Stick to the basics.
Exactly.
But here, there are like one question that comes to my mind, because every entrepreneur, the challenge they are facing,
Sure.
whenever they are going to the customer,
Sure.
today, even to an enterprise customer or any other customer, there is a delay or lag in terms of adoption of the latest AI technologies. As an investor, how much it bothers you? Because even if there is a startup which fits your bill, whatever criteria you have mentioned, he is fulfilling all the requirements. But somehow you are also aware that the adoption might take some time.
Yes.
If it is too niche or the technology is too ahead of time.
Yes.
So how are you dealing with it, and what suggestions you are making to the founders?
A very, very good question. This is a really, whenever you are selling to enterprise, this is a tough one.
Right.
It's not easy, as you went through. So it applies same like what you used to be. I don't think anything new. Enterprise adopting technology, enterprises really, once they do POC, go into agreement. I can tell you one company, I don't want to name it, but they have done everything almost to their, ICP, ideal customer profile. Buyer wanted to buy the product, but it got stuck in procurement, literally. Right. So luckily, when they send the name, we were able to, help them get from procurement to actual PO within 1 week. So that's what I kind of call it. We don't have to open the door, but really, if you can really tell us where you are, that's where really, in my opinion, as VCs, we should help the company closing the deal, right? Helping them where they got stuck. So kind of give you to sell into the enterprise in the AI side. There's one thing is shifting. I'm pretty sure you also have seen a lot of these SIs, I call global SIs, or MSPs. They're the one talking to these large customers first, because they're in the door. Right. For example, I don't know, you heard Accenture, because they're being a public company, they're listed. They made $1 billion last year, just really, doing AI services.
Yes.
Not implementation, services.
Just services, yes.
Services, right? So much money, because as you know, every CIO is asking their CTOs, every CEO is asking their CTOs, CIOs, what is our AI strategy, right? So they had to put together strategy. Of course, they're using all the, services from the big, GSIs. They're doing a great job. But if we can partner with some of those GSIs or even smaller SIs, good news, as you know, there's so many SIs from India, especially from Hyderabad too. There are even smaller ones where it is owned by an individual. They also need to change right now. They cannot just sell bodies anymore, as you know. So they have been selling some, AI services, and I know few of them have been very successful, and we made our portfolio companies partner with them. So they're actually, once they done the $50,000, $100,000 services deal, they need to implement right now. So that's where really I recommend to AI companies, the way it used to be, first you sell to 4, 5, 10 customers, then you go to partners. Right now, yes, you prove with 1 or 2 customers, get a case study, but start doing the partnerships more. I think it's a more partner-led sales than really direct sales. That's where you can scale a lot faster. Because, large companies, as you know, you heard about this one, you never get fired, hiring IBM, right? As a startup, really, they have a hard time. Like when a large company buyer, you go and trying to sell it to them, they had to say like, how long are you going to be there? Those are things that they're worried about.
First question they get asked.
Exactly. So I think a partnering model for AI companies, in my opinion, should be the strategy. And we've been also telling our portfolio companies, trying to continue to start partnering with those companies. You may not get the large company, but start with really small one first. And because they're also hungry.
Yes.
Because they can't build what you built. They do not have the same AI skills what you have.
Right.
But they do have what a kind of overall strategy stuff, right? So that you can use them as a channel.
Right. I think here you covered the next question I had about the go-to-market strategy of AI startups, right? And you have covered very well, like how they should go about it. So, Dayakar, like Next exciting thing, since you are here, the question that comes is about fundraising. Now, every startup is exciting today about fundraising. There are a lot of myths and beliefs that if you have AI written in your pitch deck, you are going to get $100 million check right away. And there are also a lot of FOMO among the investors also that we are seeing, particularly the angels and the smaller ones, that they are quite excited about AI first startups or startup with some word AI in that. Now, in this kind of situation which is happening in the market today, where I also see a lot of young entrepreneurs, they are a little bit getting carried away. What will be your suggestion, not just as an investor, but also as an entrepreneur or the senior entrepreneur, that how you will suggest them or what you will suggest that how they should take it forward?
Sure. Yeah, as you know, like one thing is there's so much hype, right?
Right.
And that hype was created. And also, as you mentioned, a lot of FOMO also there.
Right.
The investor side also, there's a FOMO there. Are we going to miss something?
Right.
It's interesting. Just kind of give one anecdotal. Just 3-4 days back, I visited my cousin. He's actually not a technologist at all.
Okay.
He never wrote any email also actually.
Okay.
And he was talking to me about AI. Okay, that means like in this country too, like how it has penetrated AI. He said he was able to, somebody gave him a phone, able to speak, the language he want, and able to get all the answers. He was thinking he was talking to a human being, right? He didn't even realize it was a machine. So that's the good news is really AI is here.
Right.
AI is solving problems. We all know right now, right?
Yeah.
So that's good news. I think bad news, as you said, there's so much hype is there, right? So as an investor, what we're looking for, I'll tell you. Then as a founder also what they should do, right?
Right.
As an investor, we really don't look at only just because, if you are doing for sake of AI, you're doing we can tell you right away.
Right.
Any investor also really will be able to tell you. So that's one thing. As a founder, you have to be careful. Why are you applying that AI? Is it solving a problem?
Right.
Then if you are really building also, are you building everything ground up or using some current tools available? But also, do you also have some, technology which is very, what I kind of call really, hard to build by somebody else, right? But technology, I can tell you right now, it's really is given. There's so much open source available and all that, right? But as a founder, if you really find a problem, depending back to, as you mentioned, the fundamental problem. If you let's say, as I mentioned, Blue Copa is a T-Hub company. Right. They found a problem. Hey, the CFOs, especially if you are a multinational big company, you have a lot of people working all over the world. How do you reconcile all this data to getting the data also from the ERP systems and all that? Are you capable of doing all that stuff first? The AI is nothing but really you had to have a lot of data first, right? So are you able to make it easy for your customers pull the data, right? Then after that, really, what are you doing with the data, right? It used to be, it can really detect the data and tell you. Now, as you know, AI is moving to next stage. So are you making sure you are able to tell the customer, hey, my technology, my product not only tells you what is in the data, but also you can start making decisions for you, right? I think that's what now the next stage we're looking at. As a company, you had to move fast. For example, I mentioned, one of the companies we invested, Code.ai, there were a conversation AI, but now they are moving to next level also, right? Same way these, startups, if they can show the traction with 1 or 2 customers, the number one thing, as you mentioned also, try to go and get that customer. I know it's hard. It's not easy. Again, the chicken and egg thing, right? As a startup, you need the money, number one. You need to build the product. You need the team. And you need also customer. But I would say using kind of a place like this math, get 1 or 2 good founders first. Right. Make sure like really the main thing we look for, Rahul, as you know, the team. We kind of call it team, TAM, traction.
Wow.
Right?
These are the 3T philosophy.
3Ts, right? Okay. Right? So in that one, if you give me a good team, I'll take a chance on you. Right? And that's what we look at, right? Then to build attraction, you need to have a technology. Have you built, but not technology, but build a product. Have you built a product? You know the difference between the technology and product. Right. Technology you can buy. I'm telling you, you can a lot of open source available. You can get every model you want, everything. But from that, what do? Do you need to build a product? That's where a lot of our technology guys miss it. When it's a product, I'm pretty sure you understand, like really, are you solving a problem for a customer? Have you built a product versus saying like, I built a platform, I built a technology. Nobody cares until you solve a problem for a customer. So I think if they have those team, it doesn't have to be like a big team. It's like, I kind of call a three-legged stool. Somebody, like a CTO who knows the technology team, a CEO who really has a good vision, and also maybe hopefully you found somebody who can help you on sales. Those three legs, then you can get to fourth leg school. Or we can start with the three legs. So I think that's what really this AI, any company, but AI especially right now, you can partner, as I mentioned before, can start working with locally, go and meet a lot of these SI companies out there. Meet them, hey, we are building this technology. Sometimes it's scary also, SI companies also, they may say, oh, we can build everything by ourselves. Right. But if you show like actually, this may take longer for you, you partner with me, they will listen. They're not in the business of building products. They're in the business of really providing solutions, right? So it's a good partnership, as we talked about, how they can go to market. So in the beginning itself, once they get the team, some technology and product is done, and then really they're getting some traction, and you always, don't wait until you get really, we also start talking to people, even though we invest companies, already have some product market fit, but we don't mind talking to them if they really have a good team.
Yeah, wonderful. Actually, I was about to ask you that mostly DVC invests in companies which are in a commercial stage.
Yes.
But even for early stage startup, what can be a suggestion? You have already covered the 3T philosophy. I think that applies even for the early stage startups, and how they can form a team. Coming back to a little bit on the more like startups which are in a commercial stage, right? Who are making some money. Now that is an area which is the trickiest part in the startup journey. Sometimes some people are really good, what we call them as the sprinters. They are really good in building the companies, setting up the tone, raising the initial fund, building the product. But now scaling up is a different ball game, right? And that's where like your personal experience plays a major role. So we'd like to understand from you, when we have to scale up enterprise solutions or SaaS or AI-based startups, what are the philosophies or what are the suggestions that you would like to make?
Sure. So as I mentioned to you, Rahul, we invest mainly just give you, right? Most of the time, 90% of the time we invest in companies, we give you those 3 T's, right?
Right.
Team, what the traction, what the TAM, and the technology product, right? In 4 T's if you look at actually. With that, really, if they already have close to what you call a 1 million ARR, annual recurring revenue, or 8 crores in rupees, and that core team in place, and we invest anywhere $2 to $5 million. That's our criteria. But we do make exceptions, I told you, right?
Yeah.
If we like the team, if we going out for example, we have invested in the anti-money laundering company in Chandigarh, a company called IntelliWings. Okay, they were not actually, they had only 100K revenue. They didn't even have $1 million revenue. But we like the team. We also like the sector they were in within the cyber security stuff, right?
Okay.
So the company has done very well. You will see like they actually going for next round and all that. So we invested. We actually put small amount of money, but now we are investing more money in the company. So I think for those companies, what do you need? Right? As you mentioned, right? They may get to $1 million revenue. I have seen so many companies, so many founders, they do very good job getting to that 0 to 1 or 2. Then they get stuck.
Yes.
When you get stuck long time, it gets harder to raise money. So that is the time you want to make sure find the right partners. It could be either investor or some angel who willing to join you guys as a partner, as an advisor. Make sure like I take them as quickly as, because you don't want to stop. This is a moving train. You need to show that growth.
Right.
If you don't have growth, you cannot get really funding. As you know, venture funds, they're investing in the high growth companies.
Right.
They're not investing, nothing wrong really if you want to go slow, they're not investing lifestyle business. Because technology changes so fast, you need to grow, like what example I gave you, like a core.ai. So I think that's where really we feel like we have a product, pretty much, we're going to call it DVC advantage, right? This is nothing but really helping portfolio companies, 3 major areas. One is, how can we help you not only introduction but help you close deals?
Okay.
How can we help you actually hire right set of people, right? As you know, like a founder gets to $1-2 million, but you may need a good channel or a CRO and all that. We have done that like that. For one company called CoStack, we actually got a guy from Microsoft. He has done a fantastic job right now. You know how he took the company revenue 3 million to 10 million. So that's the second DVC advantage pillar we kind of call. Third pillar is really how do we help you also in the beginning itself, like put a strategy and get the growth investors. Because we come in pre-series A, series A, but you need series B, C and all that. So we try to line up those people, right? So we have done all the things we talked about right now for our portfolio companies. Some of them we did already not customers. Some of them we got them, as I mentioned, to CoStack and other company, even Core.ai. Not only Chief Revenue Officer, we think if there's one more position is very, very critical in any of these software companies, customer success.
Yeah, so delivery.
Exactly. As you talked about, for them to land and scale, we kind of call, pretty much where really, an enterprise, you may have landed only 5K per month. Did you grow to 100K, 200K per month? That's where really land and expand help. That happens if you have good customer success person who really takes the responsibility of not only making customer happy, but also how you grow the revenue, right? So I think that's where really we feel like our DVC advantage making a huge difference with these companies, and we are seeing that paying off for our portfolio companies. For us, indirectly it pays off for our investors too.
Wonderful. Now coming back to, like, we have gone through the journey of starting the company, investing, scaling, exit.
Yeah.
So exit is the most exciting thing for any investor, right?
Yeah.
So what are the exit strategies that as a fund they should adopt, or the startups or the founders they should prepare for exit, and what all things they should keep? When is the right time they should start thinking about exit?
Very good question, Rahul. This is one thing. As an entrepreneur, be honest with you, I did not know, right? I raised a bunch of money. When we had some offers, I didn't exit. I thought like I'm gonna just to build a company, but it was a huge mistake I made. I had an offer to get acquired for $800 million for my company, which we did not exit. So I kind of coach some of these entrepreneurs. You always have to define what is your product. The good thing is there's so much data available and there's so many examples available also, right? There are some founders, companies, they could become a large enterprise, right? If you think you can become a large enterprise, go for it, right? But if you think you are a tool, I mean, that's what I kind of call, and this tool will be part of other large company, right? Those large companies always looking at buy versus build, right? So that's where I kind of tell these entrepreneurs, don't say, I'm never going to sell. I know a lot of, entrepreneurs, I want to build into $1 billion company. That's great. Have that one. But at the same time, make sure like really you start thinking about from the day one, like, right? If you build a product, because 90-95% of companies are sold or bought, I will say, right? Basically, very few companies go IPO and all that. Very few companies become large companies, right? So you have to kind of look at, as I mentioned to you, that infrastructure layer. We look at these tool companies can be bought up by bigger companies. For example, within data side, right? Databricks, there is a lot of money right now. They had to grow. They will be acquiring some other companies. So you need to start, I kind of call it dancing with those companies, right? Before going for a dating. So I think, I tell founders, you don't need to sell a company now, but have a plan who will be your right partner for you. I'm happy to tell you one of the companies we are planning to invest. Actually, I met him at T-Hub here, company called Effective. I was in the panel, and his name is Ravi. This company, he did a great job, from the day one when he started building. He actually made sure on the go-to-market, even though he's here, he also spent a lot of time in the US. That's one advice I give to startups from India. You never can outsource sales until you get to $10 million revenue. So you need to be there. If you want to sell in the US, you had to spend one of your founding team need to spend time out there. He did a great job. Actually, we plan to invest, and we also introduced him to a customer. With that customer, he also able to get revenue. Then luckily, luck for him, he got acquired actually, by one of his partners. So that's what I kind of always tell. Make sure like a partner with your, think of sometimes you think they are competitors, but they could be buyer for you, right? So it happened to me. One of my competitor actually, good technology, bought JP Mobile. So that's what happened.
Yeah. Even same thing. Even I experienced that. One of my customer actually happened to acquire. So coming back to the next topic, you have to say as a summarization, right? We have discussed about a lot of things about investment, AI, technology, your journey, but how you see the future of AI and the venture capital firms?
Yes, I think it's exciting, to be honest with you, right? And when I see in the US, even China, and India too,
right?
I'm pretty sure all of us kind of talking about this deep seek and all that amount of money went in, and what happened, and it just I was looking at the numbers. Like right now, everybody thinks DeepSeek was small amount of money invested, but within China right now, when I look at Tencent, all these companies together, they invested $156 billion.
To build the infrastructure.
Exactly, right? Yeah. They really going pretty fast. But I think, in my opinion, India, VCs, I think we taking advantage of, there are a lot of infrastructure already built, a lot of LLMs already built.
Right.
Right. I think India, we have a lot of talent which knows a lot of business problems. I think they can build a lot of vertical applications. I think that's where really I see, I'm seeing a lot of other experts also talking about from the US too, what India should do versus China, right? And building, yes, if some people want to, invest in LLM, it's okay. But I told you like that infrastructure layer, like what we did in Simply Smart, there's an opportunity in that area. And also vertical applications, a lot more opportunities. Because if you look at India has a good talent pool, they've been working for a lot of the services companies. They know the problems of all these large enterprises.
Right.
They've been doing a lot of data for a long time before any other countries did, right? So they're able to take advantage of those problems and build AI applications. I think there's a great opportunity, like really for DVC, other VCs also investing in those vertical applications and some horizontal, but a lot more vertical than horizontal. Like I can see in the US, especially from the Bay Area and Israel and all, they already done a lot of even that tools I talked about, right? It could be in the security, optimization and all that. So those are two areas I kind of see. And other thing also I wanted to mention, you talked to me about really how entrepreneurs should approach on the fundraising. One of the things I'm happy to tell you, I've been wanting to do this one for a long time, but finally actually written a book about, it's called Ace the Pitch. Wow. It's coming out hopefully, and we'll be able to release with you guys here.
Okay, when is the launch?
Hopefully within a month or so coming.
Wonderful.
No,
so we will again see you in India?
Sure, hopefully, yes.
Great.
So that's coming out. I think it's from my own experiences I have put together what a deck should be, how it should be concise, and how many slides it should be, and what they should focus on. So it has some pretty good details. Hopefully it will be useful.
We'll be all excited for the launch.
Thank you. Thank you.
So coming back to the next thing, you briefly covered about DVC Advantage, right? For our listeners and all the entrepreneurs, if you can highlight like what is this all about and how you're helping startups with this program.
Thank you. Thank you. Thanks for asking. This is the most important thing for me in our Dallas Venture Capital as a fund. Anybody joining, first thing I tell them, are you willing to help our portfolio company? Right? Can you do any 3 or 4 things I mentioned to you? There are 3-4 pillars in DVC Advantage. One is, opening doors and closing some deals for them. And can you help them recruiting? Can you help them really on the next level of fundraising? Can you help them also on the exit? Right? If you can't help any one of them, then it's very hard for you to work within the fund. Because as you know, Dallas Venture Capital, it's not only our core team, we are close to 13 people, US and India together, but we have close to 30. These are advisors. These advisors are not just for namesake advisors. Most of them also invested in the fund.
Right.
And these are the people I told you are practitioners. I mentioned to you when we are selling to information technology buyer versus operation technology buyer, these are the buyers. So we are able to use their expertise before even investing, as I told you, to validate the deal first before we go for next level of due diligence. Then after we invest, we make sure one of them work with one or two companies. We kind of call there's 3 or 4 touch points every portfolio company from our DVC, 2-3 touch points from our DVC Advantage team. Then there will be investment team, 1 or 2 touch points every week, every month. That's the mantra we put in, and it's been working. And especially if you ask any of our founders, they will tell you, that's what I tell even my investors. Please call my founder without calling me. Just call them and what they tell about us. That's what end of the day I look at. This entrepreneur is the one I had to tell you, how we are doing it, not we kind of saying it. So I think the program is working very well. It's tough. It's not easy to do. I can tell you, close to 30 to 35% of our cost goes into that one.
Okay.
DVC Advantage. We have 3-4 full-time people, and also this advice network. We make sure they also get benefit, and we don't charge anything to the portfolio companies. All on our cost.
It's the value that you're creating.
Exactly.
Yeah.
Exactly. So that's the as I said, really, money is green. Everybody can invest, but really, are we adding any value? Why they should take money from DVC? I mean, that's what we try to do. And also we work with the ecosystem very well with other VCs. We have done some investments here, as you know, with Blue Copa, K Capital, and Mela Ventures and all that. So we feel venture is a very collaborative effort, not a competition.
Yeah.
So that's a good thing here in the US. We have done in both places right now.
Yeah, I'm excited about one thought that is my takeaway in this discussion. Last 1 hour or more than that we are talking.
I didn't realize we've been here for a while. Right?
Yeah, so I'm not getting a feel of a venture capital or a venture capitalist from you.
Yeah.
I'm feeling like you are trying to build an ecosystem to help the entrepreneurs grow, and that's a wonderful motivation for any entrepreneur to come and join DVC. And I think that is what the conscious philosophy that you and your team is having.
Exactly, it is. They definitely really, as you can see, just some of the things I talked about, we practice also, right? 3 weeks back, we have created this session called USGTM. This is for everybody. We invited in Bangalore. Hopefully, we can do something here also in T-Hub, 60-70 founders, for them to listen how you should go to USGTM, right? We invited one of the experts from the Bay Area, and we invited some successful other entrepreneurs. All the failures, what happened, even we shared some of the failures from our own portfolio companies, right? So that's where we think as a fund, because I feel like a venture capital, as we know, will not exist unless you really kind of helping these founders, because there's so much money available from PE, angel and all that. So especially the stage we are paying, that pre-series A, series A, is very, very critical, that 1 to 10. After 10 million, once they get it, they could hire a best VP of sales, and they can hire a best VP of channel. But that is the critical stage, because even those best salespeople don't join you. They want to see, you have a brand, you have enough money in the bank, you have some traction. Because for them, once they come in, they want really go ahead and start selling and make money.
Yeah, and that is what I believe sometimes, that the entrepreneur need to be a very good salesperson himself first.
Is it? It is. If you think like an introvert, you better change it.
Right, that's not your job.
That's not. You had to become sales guy. I'm telling you. Right. So that's the key. As an entrepreneur, if you can't sell it, please don't start a company.
Right. So coming back to what are the recent investments that you have made in India, if we have talked about?
Thank you. We haven't announced it, but I'll tell you. The recent investments we have done called Saibog Intel. Saibog Intel is a Pune-based company. They have built a great platform.
Suman Singh.
Suman. Yes. Yeah. Walson and Suman. Wilson is in the US. That's really what we liked about Suman is he actually got the product get going, but he built a platform, but he focused on one use case to help really anybody has done any debt financing and debt side, how they can really help them to basically, people, basically pay back and all that, right? So he actually built this product for companies, CFOs, but also he did a good partnership with one of the major software company that sells into BFSIs.
Okay.
Right. So that's a really good way to get into the US market.
Okay.
So we liked him not only build a product, he got some customers here,
Good
but he
traction.
got a partner to sell it. Then he also basically hired a person, became a co-founder, Wilson, from his partnership.
Okay.
So, and that's what really I kind of call it really success GTM strategy you can use. And I think he's going to do well, and we'll looking forward to working with him.
Wonderful. Any thing that you'd like to say as a closing note?
Sure.
I know if we continue this discussion, probably a couple of days will be less. There is so much insight that I am also getting, and I'm sure the listeners also learning.
Thank you.
But just for the sake of time and keeping everything in mind, as a closing note, as an advice to the budding entrepreneurs,
Sure.
particularly in AI,
Yeah.
like 2 cents from you.
Sure. And as I mentioned before, please, really use math. I'm telling you, I never seen, I'm so excited what you doing here. Get 1 or 2 your co-founders, number 1, the team, right? Then focus on really, what I kind of call it, try to go and talk to 2, 3, what I call it, design partners. Those could be your customers, right? Then really once you get that one, then money will come. As you mentioned, like money is there. That's really, if we can show 2, 3, customers willing to take a bite, and you will do well. And as I mentioned, like really, it's look for a painkiller, not for a vitamin. That's my closing.
Wonderful.
Thank you.
Thank you, sir. Thank you for
Thank
your
you.
time. And I'm sure the listeners and all of us have enjoyed this discussion.
Thank you.
And I'm sure you have also enjoyed coming and visiting Math.
Really enjoyed, I'm telling you. This is very exciting for me to see. Be honest with you, I've been to Bay Area and a lot of places, but I've never seen a incubation center focusing on AI this big and a beautiful center. Especially you showed me a theater. I'd love to come here,
Sure,
enjoy
we'd love
movie
to
with you
host
guys.
you for
Yeah.
your book launch. Then.
Yes, we'll do that one. Thank you. Thank
Sure.
you.
Thank you, everyone. Thanks for watching this video, and do like, share and comment so that we can bring more such exciting people from around the world for you to learn and grow. Thank you and welcome to Math.